93, 4,200. Support below at 50, 40, 33, 22, and 09. Pivot 58, support 50, 40, 33, 22, and 09. Resistance on the upside at 68, 77, 84, 93, and 4,200. As the market, you can see here at 7:30, got news of the inflation numbers, which were little better than expected, but anything better than expected with inflation is obviously a good sign. The numbers, to be exact, they were CPI was expected at plus 0.2, came out the month to month at plus 0.1. The year to year 5.1 expectation came out at 5.0. The core that was just as expected, 0.4 on month to month. Came out at 0.4. And yearly core, they were expecting 5.6, came out at 5.6. So the main number that everybody looks at definitely came in right where it is expected. And so that was why the market here gave it a little bit of a rotation up here to the upside. All right, let's see what the day brings. We never know what the day could bring, as we are just scalping many S&Ps here, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. Combination of both of those gives us our opportunities to scalp the market based on the levels we just gave out. So we'll see what happens this morning. Kind of, you just never know how the market's going to react once the market opens up. So we'll see where this brings us today. All right, we're just kind of hanging around our pivot here. Again, if anybody has any questions, feel free to ask in the chat. All right, we're just kind of hanging up here. You can see the bond market on the left there, on the chart on the left, kind of definitely we are kind of mimicking their rotation. It looks like a very similar chart to the one we have. So that is obviously doesn't usually happen, but for the time being, we shall just say it's because of the great link between interest rates, inflation, and equities. All right. I've got a little resistance up here at the 68 area. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. And again, we're just waiting and being patient and waiting for opportunities to scalp based on the levels we just gave out. And if you look at the chat, you will see the levels there for you. And again, it's a matter of just being a little bit patient and waiting for the opportunities to present themselves and then to trade once they are there. We're not trying to really guess which way the markets are going. We just kind of wait for good reasons to trade, and obviously, technical reasons is one good reason. Price action opportunities another good reason, and our if we want it to be our bands are another good reason. You can see there it dipped down to the 50 uh, blue band there and rotated back up. Again, there's different degrees of risk takers, and so everybody here has their own level of risk and what they're looking for. So, all right, we're a little range bound here. As you can see, the market is a little range bound over the last 30 minutes. We'll see which way it wants to go from there. The closely watched CPI numbers is seen easing future in March. Seen easing future in March. Doesn't make sense. But anyway, but not really enough to meet the Fed's price stability mandate. The inflation data due later today, which just came out, will offer a signal as to whether the Fed will raise rates or pause hikes in May. One of the biggest debates on Wall Street. Economists expect March CPI number to rise to 0.2, lower than the 0.4 pace record in February. Year to year, we talked about those numbers. They came in just a little bit less on the month to month and then the year to year. While headline prints would mark the slowest annual increase since May 21, it would still be more than double the Fed's 2% inflation objective. The monthly increase in CPI for January and February also did not inspire the 2% confidence level. It's just around the corner. That the 2% level is just around the corner. Set some analysis. That gap means that gap means that another 25 basis point hike will likely take hold at the Fed's May meeting, which Fed funds futures are largely pricing in, bringing in the policy target to 5 and 5.25. The markets are expecting the Fed to pause rate hikes in June. To feel good about where the inflation is headed, we need to see some moderation in the headline core inflation, which I guess what we got this morning. The Fed will also release the minutes of its March meeting in the afternoon, which will closely be watched for clues as to how policymakers assess the rate path in the wake of the banking crisis. So that's, let's see what other numbers are going to be coming out today. So that's at FOMC minutes are going to be released at 1 o'clock Chicago time in case you are trading. We talked about the CPI number that came out already as the market is just hovering around our pivot area here. Then there's at 9 o'clock at the top of the hour, there's the Atlanta Fed inflation expectation index. So it might be a little bit of a market mover. That's going to be out at the top of the hour here at 9 o'clock. There is also a 10-year note auction at noon. Again, probably not going to affect bond equities so much as bonds. And then obviously we have the FOMC at 1 o'clock Chicago time if you're going to be trading later on this afternoon. So a little number coming out here at 1. Anything to do with inflation, though, you have to be a little bit mindful. So we'll see what that number is going to bring here at the top of the hour. Maybe it'll give us some volatility or extend this range here a bit one way or the other. All right. So yesterday, Jan John was talking, and she said downplayed the great stresses that the IMF raised as a serious concern when asked about the IMF trimming its 2023 global growth forecast. Jan said the U.S. banking system remains strong. She said she noted that the global financial system remains resilient due to significant reforms implemented after the financial crisis. Yellen remains vigilant to the downside risks surrounding the world economy in the wake of Ukraine war and banking pressures. I'm not participating in a downturn in the economy, although that remains a risk. She said yesterday the IMF dimmed its outlook slightly to global growth to 2.8%, but said gradual disinflation is expected in all major economies. So I guess that's kind of yesterday's trade didn't really affect it. You can see we were range bound yesterday, big time. Just kind of not doing much. Right now, we're not doing much either. Again, these rally markets, when they start upticking a little bit, do trim the volatility out of the market. It's just the nature of the beast, I guess, when the markets go up. VIX is probably trading at an 18 handle, I would venture to say. We'll find out here. So if somebody knows what the VIX is trading, could you let me know? 1859 is where we're at. So again, very, very tight little continuation of the lowering of the VIX, and definitely lowering of the volatility in the market. All right, we come down here again to the 55. We got low support at 50. A little bit of a sale here below the 53 if you're looking for an opportunity. But again, the problem with momentum trades when the markets are thinned out a little bit, or volatility is thinned out, I should say, is that we don't get that follow through that we're looking for. But there is a little bit of a sell here below the 53 area, looking for 50. Getting a little help here from the bond market. You can see we're kind of doing the same trade the bond markets are doing. Again, a little bit of a sale here below 53. Looking for push down to the 50 area. Trying to get it right now. We did get down to 51 there. Again, if you have your orders in place, we talked about scaling in around it. Obviously, if you were short there to 53, maybe you're getting out there to 51. Again, we always wait for the market to develop those opportunities for us. We're not guessing as to when it's going to happen or not. But there was a technical reason why we wanted to get short there, again to 53, looking for our rotation down to 50. And remember, we scale in around the 50, so our level there was obviously the first entry point would have been around 51. If you are scaling in, which again, we're not going to be perfect, so you have to keep that in mind. And like I said, the bond market did kind of help us there by rotating down. Let's see if it wants to go and retest that 50. We're on the same bar. If you did get filled there. All right, we are coming down to the 50. We're on the same bar here. So if you were a little aggressive and wanted to retake the level, again, the fact that we're on the same bar is important as far as how we trade an area or a level. But we did have a little bit of a sale there below 53, looking for a push down to the 50 area. So as much as we like to counter trend trades, we also do have momentum trades when the market sets itself up for it. All right, so we did have a nice rotation there down to the 50 area, and a nice pop up here above the 52. If you scaled in around the 50 area again, it all mattered, depended on the fact that it was the same bar. So we kind of still hold our position now. If you have the 49 or anything below that on your scale, probably a lot more riskier, and I would not be trading those levels anymore. A little bit of a bind coming in there at 50, very quietly, and they're not showing it. Look at that. They're traded 1,000 lots there without anybody knowing it. But of course, you're going to push down here a little bit now once we get through. And again, the 50 area is hopefully you were able to jump in the first time or get short there against the 53, looking for a 50. All right, now next level on the downside we're looking at is at 40. You see our green bands coming in there at the 41 area in our 5-minute. The 41.75 area is our blue band in our hourly, so we have some layers of support down there, in case you are wondering. And the value area was down there as well. So again, depending on how aggressive you wanted to be, there's layers of support in this area here. All right, continue to downtick here a little bit. We have 40 area, but I gave you some other opportunities in case you were a little aggressive there. Now we're coming down here to 41 and change area. Again, the green band coming in there at 41 and 75, you can see. All right, we're down here to 41, so and got taken out. And looking here at the 40. All right, nice trying to rotate for us. Almost gave it to us there. There we go. Now it did. Nice little quick rotation there against the 41, and very minimal heat. No heat whatsoever. Again, we got layered in there with a lot of support. Now we can try to get a little bit more here than 2 or 3 points out of it. Again, 3 points here now out of it. Let's see if we can't get a little bit more. Again, have a trailing stop on anything else you put on. All right, so nice little trade there. This time, if you did have, well, it got down to 40 and 40.75. So we did talk about the green band coming in there at 41. You can see the blue band in the hourly at 41.75. So had to make a little bit of an adjustment there against all of that stuff, and giving us a nice rotation here and have a trailing stop on anything else. And if anybody has any questions, feel free to ask. You can see the levels that we put there in the chat for you. Again, we use those as a guide to the day, and we're scalping around those areas. And we had a reason to get in there at the 41. Again, when I put out the levels, I'm not looking at my averages or anything like that. I'm just taking technical analysis, and if the averages match up with something, gives you a secondary reason to feel more confident in the trade. Is it always going to work? No, but hey, it worked this time, and you should just, what we try to do is give you confidence in putting in those trades. I know sometimes the markets are breaking like they were, and you feel like, oh my God, this is where I'm going to buy it here. And you have to have those orders in place, because it was one opportunity there, and then it just completely straight started going up. So if you didn't fill down there, I wouldn't suggest you fill it this time around. You have to have the orders in place so that you can take advantage of the opportunity. Again, mentioned the different layers above the 40, even though we had 40, but there was definitely reasons to get in there around 41 for sure, and even a little bit higher than that. And you got a nice rotation all the way back up here to the 46 area with, like I said, very, very minimal heat, if any. All right, nice little quick opportunity there. A little couple. It's nice to get some volatility in the market. As you can see, the markets go down, the opportunities do present themselves a little bit better. I don't know why, but it always seems when markets are going to the downside, the opportunities do become a little bit more obvious, or they're there for us, and then we get some rotations. All right, next level on the downside we're looking at is down at the 33 area. All right. Again, the support level there worked very nicely, and now we're just kind of floating back here above that 40 area. Got down to 41, and it's kind of pointing out that there was good reasons to buy the 41 area. And we got a nice little rotation here above it. And And again, if you're trying to stay long there, you're getting a nice little push here above the support level. And how can you stay long? We talked about that. It's a matter of managing number of contracts you're trading. That allows you to take profits and then maybe keep one or two uh, in your pocket and see if we can get a rotation off of it, off of a support level, or short it against a resistance area. And that way you can take more than 2 or 3 points out of a trade. And again, you could do it using a trailing stop. You could take your profits on everything else and keep your stop in place and see, where you would want to get out with the other contracts you have left. Different ways of managing trade, obviously. Fantastic, Chad. Glad you had a good morning. All right there, Don. Good job. All right. Fantastic there, Dudley. We had some nice opportunities, and the market was cooperative today. It gave us some movement. It's nice when it moves around, gives us opportunity. I mean, again, we're not always going to be right, but the opportunities are there when the market moves around, so that we can have the opportunity to try to find some trades if the market gives us those. But sometimes we've seen how quiet it's been, and we just have to take the good with the bad, right? So today was good, and yesterday was just slow, but had to be patient, pick your spots. You heard me talking a lot about everything else but trading, but hey, it's okay. All right, we do have a number coming out here at the top of the hour in about 2 minutes. So let's see where that brings us. All right, again, we've got, again, we like to be flat when numbers are released, so I definitely don't have any positions on now. And we'll see what this number brings. here. Is it going to move the market? I have no idea, but it doesn't really matter. We're just going to trade what the market gives us and go from there. Anything associated with inflation, Atlanta Fed inflation index could move the market. So we'll just kind of just let the number release and trade whatever happens from there. Support down at the 33. That's what I would be looking at next. And the upside, well, it could go back into that range that we were in this morning. 6 to 58 is our pivot, but we got 56.5 there is our blue band. Yeah, I mean, we could go right back up there. All right, number is out, and they didn't really clear it up that much. Guess maybe they knew what it was going to be. They're just kind of just chopping around here a little bit. Oh, okay. Simply because we came down here at 55 area 3 times. Yeah, and last time going through didn't have to be a double or triple bottom straight up. It was just the fact that we were down to that 55 area 3 times and they bounced. And figured the 4th time through they might sell it through. Right here. Kind of just came there 3 times, and then that was the only reason. All right, we're just kind of hanging here, kind of staying in the same range, a little bit moving around, but nothing for us to do. Again, range bound trade, not our best, opportunities. At least I don't like it, but again, everybody has their own thing. Yeah, well, that I understand, and that could work. But if you look, we had that one the one little spike below, got down to 54 and change there, and then basically that was the same as 55, and you can see there were two on the other side of it. So it just fourth time down there to that same area kind of made that opportunity there below the 50. That's why I said below 53, you need to be short. All right, well, we're just kind of floating back up here in this range thing. Still, we will look and see if we're going to stay in the range or not. A little resistance would be our pivot there if you're a little aggressive. Probably venture to say above the 65, you're looking for a push up to the 68. Again, bond market kind of, it's almost an identical chart, right? At least for the time being, they're kind of moving together-ish. And so the move down to the 41-40 area was definitely related to the bond market move. You can see how the bonds rotated back, almost an identical chart. Again, if you made some money against the first couple levels we had, you're going to pick your spots here. Probably if you're more risk averse, you're probably looking at the first resistance there at 68. If you and then support down at 33. If you're a little bit more risk taker, maybe you're looking at the 58 here as a little resistance. Again, all depends on kind of trader you want to be or are, or maybe you just, depending on if you have made some other money here today, then just pick your spots or trade it small. Again, different ways of trading. All right, we're slowly upticking here a little bit. Again, depending on how aggressive you want it to be, maybe a little bit of resistance there against the 58 area, which is our pivot. You can see now if you're going to follow the bond market's down back to its lows. But again, so I said earlier that we followed it to a point, and then all of a sudden they kind of start doing their own thing. So I don't know if we're doing our own thing now or not, or we're going to stop following the bonds or not, but it is what it is. All right, we continue to slowly uptick. We're looking at the little resistance around the 58 area. All right, we kind of inched our way up to um, 56 and a half there against our 58. Um, Came back off here a bit. Again, depends on how aggressive you want to be. There's a little resistance around our pivot there. Coming right up here to our 58 area now, if you were a little aggressive. Again, if you made a little bit of money and you're more risk averse, you're looking at the 68 area above. If anybody has any questions, feel free to ask in the chat. All right, nice little rotation there against our 58 area. Got right up to 775. And bouncing back off here. If you got in there at 7.5, 57, you're getting your 2 points and a little bit more here. Again, all depend on there was a reason for it. So nice little quick trade there if you were looking for a quick scalp. And a nice little quick opportunity. Again, it all depends on how aggressive you wanted to be and how risk averse you were or are. But that was another quick opportunity for some of our blue banders there. They love the blue band. I know you took that for sure. And again, it's a matter of recognition of a trade, right? There was a couple of reasons there. Our blue band was there. Our pivot was there. A couple of reasons that we suggested maybe that would be a little short there against the market. All right, so nice little quick trade there. Again, if you're trying to stay short with the trailing stop, you could do that. That was a quick rotation there for us.